So this is how I determine the trend or the direction. I go all the way to the monthly time frame for the pair in question, and then I determine my key levels, right? And so you see those blue rectangles that I use, those are to determine my key support and resistance on the higher time frames, right? So first you take notice of where price is. So you see you have all this data, right? But right now price is right here. So what we're concerned with is levels close to where we are right now. And right off the bat, we can identify a few key resistance zones. One in particular is right here, and I'm just going to make it as tight as I can and just stretch it over. And then when you get to the smaller time frames, you can always adjust. But this is nice. The reason why we use these zones is to cover, you know, a lot of this price action. And imagine using lines. When you get to the smaller time frame, you would have 20 lines instead of a nice clean zone. So you see we're covering all this resistance dating back to 1993, right? So a lot of data, a lot of resistance, you know, especially in the early part of the 2000s. You know, from 2001 all the way to 2003, we were capped underneath this level. And then we had a momentary break in 2008, but then this came back down. And now we are finally going to make another run at it. So that's my first resistance level. At the same time, we will look for a support zone, and that will be somewhere down here. Right, we're catching these supports, rallies from here, multiple rallies, very similar. And you can see in the past, after that big push in 2008, we came back down and we broke that support, and we spent a lot of time down here until Obama and then Trump came in and we started this push back above. So that's one way of looking at it. So overall right now the direction is up, as you can see. Looking at recent price action, it's making higher highs and higher lows, right? It's nice and going in a nice stepwise direction going up. And so right now that's the bias. And say if we break this resistance level, a next target zone would be these wicks over here, or something like this zone right here. Okay. So now we have that. Now we go to the weekly to kind of confirm our bias. And on the weekly, you can kind of see that same little, you know, higher high, higher low, higher high, higher low, higher high, higher low, etc., 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 etc. So a nice upwards price action. And then this candle right here, this weekly candle, is hugely fundamentally driven. We all know why. I don't want to repeat myself, but this candle right here is an indication that this was a fundamental move, because it's rare for you to see a candle of this magnitude. You see we have a gap here, and then we have a huge wick to the top side, and then the body all the way down here. So this is definitely going against our bias, because this looks pretty bearish, right? With this kind of price action. So what we do on the weekly, just to confirm our kind of our feeling, is we identify our weekly levels and any weekly resistance. So right off the bat, I can see right where price is. We do have some solid resistance, and I'm going to use my line tool to cover that. So you can see if I zoom in while moving to the left, you can see resistance in the past here, resistance multiple times here, resistance multiple times here, resistance turns support, so support here. So you can see that similar price action happening at that level, and so that's a key level for us. And at the same time, we'll be looking for a weekly support. So if you just pan out the charts again, you want to look for areas of price where rallies stopped and we had a rally start again, and that would probably be right around here. So you can see, you know, when price came back from this resistance zone, it popped back up from here. When it came here, it popped back up from here. When it came here, it had a mini rally from here, closed back below, and then when it came back above, it had a rally. Similar thing. So this level is definitely key. We used it in the past, and we have used it as resistance as recent as 2015 all the way to 2019. We've used it as a resistance. So those are two levels. Now we have a clear idea of what we want to do. The weekly time frame, which is this weekly candle, is this week's weekly candle, will pretty much tell the tale. So if it does close back above this resistance, then we're going to make a run for this level. If it stays below, then we can start looking for shorts back down to here. Now we're going to go to the daily, and this is where I start to look for entries and possible intraday ideas, right? So on the daily, you can see the huge gap over here, which we haven't filled, and then the huge wick to the upside we're talking about. So on the daily time frame, we could in fact look for longs, given that this candle closes above this level. Right now the daily candle is below that, and so the bias right now is mixed. However, we have this previous swing low, so now we have a perfect chance to decide. So if this daily candle stays below here, and let's say Thursday we get another candle somewhere here, okay, so we have candles coming down. Now if tomorrow, if on Sunday's market open, we have a candle come down here, it's a bearish candle like this, then we'll be looking for shorts back down to this weekly support. Okay, that's the idea. Now let's say today is Thursday, so this candle closes like this, and then Friday this candle closes, the Friday daily candle closure closes above this weekly resistance, and then Sunday and Monday we'll be looking to long to this level. So that's the breakdown. On the higher time frames it's bullish, but if we go down to the daily time frame, we have a mixed idea, because the start of the week was very, very ugly for many pairs, with the huge wicks to the top side or the downside, and now over the course of the week the markets had time to digest the current situation, and we have some of those wicks being filled. So that's my kind of thought process when identifying the trade, and this helps you trade with the trend, because if the monthly, the weekly, the daily, and the 4-hour all align, then not only are you trading with the trend, you're also trading with momentum. And when you do those two things, you have very little drawdown, and you have a high chance of getting good setups. So that's just my opinion. Hopefully that helps you out. Great.